Hey everyone, Coach Kelsa here. I hope you guys are staying healthy, staying sane, all of that. Happy hump day to you guys. Is anyone else having a little bit of a hard time keeping track of the day of the week? It feels like every routine has just been like thrown up in the air and nothing's settled yet. And it's hard to kind of remember like what day of the week it is. So today is Wednesday. I'm pretty sure I had to look at that before I came live. So happy hump day. If you're joining me, go ahead and just leave a comment and say happy hump day. That way I know you're here. Even if you're just watching the replay, go ahead and say happy hump day. I wanted to update you guys on something. We've been doing these community chats. If you haven't joined them, I hope you will try. We're going to do them every Monday for a little while at 5:30 p.m. Arizona time. So you'll want to do the math on like what that means for you, since we have people from all over the country joining us. One of the things that we talked about the last couple is some of the options that are available as far as postponing car payments or student loans and mortgage payments right now. And one of the things that I was cautioning people on those calls about is, if you're going to take advantage of something like that, it's not a bad idea, but make sure you understand the long-term ramifications and the short-term benefit as well. So I decided that I would call my mortgage servicer and ask some questions and possibly postpone my mortgage payment. And I wanted to talk through that with you guys on what I discovered and how that process went for me. First thing, that the reason I decided to do it was, one, to lead by example. So as a small business owner, I think that we're going to be just fine through this, and yet it's not a bad thing to like postpone some payments if you're just not sure about your cash flow, since no one really knows how long this is going to last. It's often really normal that financial stress or an inability to pay a bill or to want to postpone a payment can create some guilt or shame in people. So financial stress has the ability to create shame more than just about any type of financial stress. And the result of shame is oftentimes avoidance. And so you kind of want to stick your head in the sand, pretend like this problem doesn't exist or anything like that. And one thing that I wanted to do was sort of address this head on, show you guys that it's okay. There's nothing to be ashamed of. I really do believe that. So if you need to postpone any of your payments just in case, I highly recommend taking advantage of that with caution. So here is what happened to me. So I called Wells Fargo. That is who my mortgage is through. That is not who I applied with. They bought my loan years ago. I don't know how long ago now. In case you have not seen any of the news about Wells Fargo, there is actually a great Netflix show called Dirty Money, and they did a whole episode about Wells Fargo. So just so you know, Wells Fargo is not exactly known for doing the right thing by their customers. So I'll just leave it at that. So I was very cautious when I called. I had to wait on hold for 1 hour and 12 minutes. Your wait time may be longer, shorter, depending on how busy or how big of a bank it is, how many people they actually have in their call center and that kind of thing. I have never appreciated so much those options when you call that give you the option for them to call you back. Like you get put in a queue and then they will call you back. So I had to sit there and wait on hold listening to that music for a while. I just put my phone on speakerphone and got to work and waited till it picked up, and it took 1 hour and 12 minutes, just so you guys know. When I got on the phone with somebody, I was asking a lot of questions about like, how does this process work? What can I expect? And then also, what can I expect afterwards? And this is why this is really important, you guys. What I'm about to share with you is why I decided to hop in here very quickly and do a live video. So I asked what Wells Fargo is doing right now is you apply online with the person on the phone with you, and you get a 90-day temporary sort of protection, where for 90 days, there's no penalty. They're not going to report any late payments to the credit bureaus. And you can essentially decide if you want to make the payment. You can make a small payment. You can make a half of a payment. You can make no payment, or you can make your payment for 90 days. But it essentially is like a 90-day protection period. I asked, well, what happens after the 90 days? And they couldn't tell me. And so I said, well, what are you guys thinking might happen after 90 days? And I had a couple of concerns. And this is why I think it's so important to be asking these questions, because if you're experiencing a short-term crisis, you might want to take action to solve that problem. And what you could potentially do if you're not careful is create a bigger problem down the road, or essentially just like kick the can down the street a little bit. And that's not what we're going for. So the first thing that alarmed me was that it wasn't until I applied that they would actually send me any details in the mail or through email on what I was applying for. That is a concern to me. So I asked, can you send me something before I apply so I can review it and see what all of my options for, or see what I'm applying to? And they said no. So that is a bit of a concern for me, but I continued to ask questions. And then I asked what happens after 90 days. And she said, she was very friendly. I will admit this. Oftentimes they're getting the information as quickly as they're getting it. So please, if you call and you ask questions and the person doesn't know the answer, I'm not blaming her. Please don't blame the person you talk to. Likely they just don't know the answer either. So I said, what are you guys doing? She said she doesn't know, but one of the things they're hearing, because I said, well, what are you hearing could happen after 90 days? And she said, it's going to depend on who the investor is behind your loan, okay? So who ultimately invested in that loan to begin with is going to dictate what they're allowed to do and what option the borrower is going to have after those 90 days. She mentioned a few different things, and one of them is not good. So this is why I wanted to talk with you guys about this. One option is extending the loan by those 3 payments or whatever the missed payments are. So if I have 25 years and 2 months left and I miss 3 payments, when that starts, I would have 25 years and 5 months now left on my loan. That to me is like the ideal scenario for most people, is that they literally just take those payments and move them to the end of the loan, okay? That would be amazing if you ask me, if that's what everybody was doing. But the other option number 2, which is the second least favorable, is adding to the loan balance and capitalizing on that interest, which essentially means if your mortgage payment is $1,000 a month and you miss 3 of them, they're going to take that $3,000, add it to your loan balance after 90 days, and then you're going to start paying interest on that as well as the balance overall. Not a terrible option, honestly. It's not that big of a deal likely, but you're certainly going to be paying interest on $3,000 more in this example than what you would have been if you made the payments. But if you truly can't afford your payments for 90 days, that may be a great option for you too, and definitely sort of like the least, problem of the 3. The third one, which is not a good option, you guys, and this is why ultimately I decided not to apply. I did not want my name attached to the application until we know more, is that they will force you into a loan modification. So here's the scoop on why this is such a terrible possibility. Is if after 90 days, I've decided not to make those payments, and I'm either going to have to get caught up instantly. I'm going to have to pay all, 3 months of payments instantly, or I will be forced to do a loan mod. I have a great interest rate on my mortgage. I do not want to have to do a loan mod. Now, we don't know if that loan mod would force a different interest rate, if it would go for current rates. We have no idea, and they don't know either. But this is why I really want to caution you, because if rates are higher in 90 days than what your current mortgage is, this could be a very costly choice. You could end up being forced to sort of refi your mortgage to a less favorable interest rate than what you're paying right now. And nobody really knows for sure if that's what it would be. But I don't know that I would want to take that chance, right? If you don't have to, okay? So the idea is like, until I know for certain what my choice will be at the end of 90 days, I'm not going to go forward with applying or postponing my payments or anything like that. I'm going to call back in probably 2 weeks and see if they know anything more at that time. And I'll of course keep you guys posted. But I really want to encourage you to not only ask, how's it looking right now? Like, what are your options right now for your mortgage payment that's maybe due April 1st or May 1st? But what's going to happen after that? Because if they can't tell you, you don't want to be forced into making a long-term decision that's impacting you negatively in order to save money for 90 days unless you absolutely have to. So I would absolutely call, because you don't know, some of these banks could be providing very clear instructions on what happens. And if that's the case, please make sure you write down who you speak to, the day and time, and ask for things in writing, okay? And then the other thing is looking to pursue other options first. So calling about a car payment or a student loan payment before you pursue your mortgage payment to see if you even need to go the mortgage route if they're not providing that information for you. Chances are a loan mod where you end up paying a higher interest rate on your mortgage could cost you tens of thousands of dollars over the life of your loan, because we're talking about such a big balance. Even if the interest rate jump is not that high, it could result in a really big financial change throughout your life. Whereas a car payment or possibly a student loan, might provide you with a bit more flexibility on the back end of that. So I will continue to keep you guys posted. Like I said, I'm going to call in a couple of weeks and see if they're able to provide me any more information. This is exactly the fear that I was addressing on one of those community chats about how I get that we all need options now in the short term, but we do not want to make a short-term decision that's going to cost us in the long term more than it saves us, okay? So we really want to make sure we're managing long-term goals, long-term strategies, and expectations with the short-term reprieve that maybe we're looking for. So I hope this helps. I'll continue to keep you guys posted. Call your bank, because you never know. This was Wells Fargo. I can only imagine how many calls they're getting. Your bank may be much more formal in their process and be able to answer a lot more questions, but I wanted to make sure you knew to ask these questions. I'll talk to you guys later. Bye.